Hi there, this is the story of Intel, ticker symbol INTC. Right now the market cap is about $171 billion and the price over $45 per share. And the most important question for you is whether this company Intel is a great investment at the current price and valuation. And the answer, you will find it in this box. During this video, I'll open the box and find my answer. Now, to tell you short, if you want a far better investment idea or other investment ideas better than Intel, where return is much higher, 2x over 2x, and with low risk, simply go to my profile, press join, and choose Titan Investor. And there you have access to my portfolio, where my performance over the last 4 years has been over 30% a year. That's an amazing one. So this will save you a lot of time and money. Now, let's come back to Intel. First, if you look at the revenue over the last 3 years and 9 months of 2025, you see a decline from 63 billion to 54, 53. Now, for the first 9 months of 2025, their revenue has increased a little compared to last year from 38 billion to 39 billion. And this is positive. I mean, they are starting to make some improvements. They cut their costs, increase the sales, and so on. And also, if you look at their earnings, 8 billion 22, 1.7 billion, huge drop. Another huge loss, over 18 billion. Of course, here they changed the CEO. And now, for 2025, the first 9 months, they reported a profit of about 324 million. And also because of this trigger, the price increased. Now, if you look at the real earnings, they are not with plus, they are with minus 2 billion. So pay attention to the important earnings from their business. You see these positive earnings because the interest they earn on their cash. If you look at the balance sheet, they have in cash 40 billion. And debt over 46 billion. So you have to be very, very careful how you assess their earnings, right? Now, if you look also at the free cash flow, minus 9 billion, minus 14 billion, minus 15 billion, and for the first 9 months, at least they succeed to decrease, to improve their free cash flow, minus 5.7 billion. So you see the big difference between their earnings and free cash flow. Pay attention to this because it's important. Sometimes you think the earnings are with plus, for instance, 2022, 8 billion, but the free cash flow minus 9.4 billion. So the business is starting to show some improvements, but still they haven't solved their major problems. Be aware of that. Now, a balance sheet here, subtract debt, cash, they are left with minus 16 billion. Be aware of that. They have nothing on their balance sheet. You might say their assets, but also be aware there. Be aware there. Now, you also have to understand why the price hasn't improved, because it went up from $20 and something to over $45. That happened because they improved their earnings. The market, when you see their final earnings and improvement, that's good, even if their earnings are with minus. Just be aware of that. Then, they announced some AI partnerships. Nvidia, SoftBank, also the US government, especially their investment in Intel. Be aware of that. And new AI products that are about to come. And of course, they announced a new acquisition, Samba Nova, which also focuses on AI. So they are trying to catch. At the beginning, they had a slow pivot to AI. And they lost a lot of market share to Nvidia and AMD, especially AMD. If they focused on the right thing, at that time back in 2022, they could have gained more market share and market cap from this level be 2x higher. But they haven't. And what did they do? They focus on a foundry for chips, right? And this was their biggest mistakes. because the capex there has increased a lot over the years. Look at here, 9 billion, 14 billion, 15 billion. That's why the free cash flow is minus. They took all the money they made to invest in this foundry. They announced more locations, of course with the previous CEO, and because of that, they lost a lot. And also pay attention to the number of shares. It has increased from 4.1 billion to 4.2, 4.3, and 4.7 billion. So also you have dilution. And if they don't solve their problem with their earnings, improve their operations, you will see more shares issued in the future. And this is quite bad. Now, here is the good thing and the bad part. The good thing is that at least they started to switch to AI chips to focus on new products and gain more market share. They have an important architecture, is still used. And if they can adapt to it, they might come up with at least a product that is acceptable by the market, is needed by data centers. This is the good point. The bad point, some people see it as a good one, but in my view, I see it as a bad one. The investment from the US government in this company. Because the US government wants to keep this foundry for the moment. If they accept to get rid of it, that would be great. But from what I've seen, they want this foundry. And this is the drag on their performance, this foundry. If they get rid, they stop investing in this foundry, at least or make a spin-off, Intel for sure will rebound from this level. But if they keep investing in these foundries in the US and also other locations, that will be quite bad for them. Because their free cash flow continue to be with minus. They have to invest in this foundry and it will require a lot of capital expenditures. And this is quite bad. In my view, this is my view, what I see in this company. If you have other views, let me know in the comments. Now, if the US government, because now it's an important shareholder as they announce that investment, if they accept the spin-off of this foundry into another company, then investors will be well off, will do quite well. So here you have to be very careful. Now, with new products, new AI products, for sure they will come up with something. I don't know how much they will gain, but for sure, because they have the resources, they have their history, their brand, for sure they will deliver something. Now, the question is how long it will take, or how long will it take? That will be a question to answer. It may happen in the next years or after 5 years. Nobody knows that. I expect in a few years deliver something something that they can make more money and increase their market share. Now, here is the problem with Intel. The market already sees these improvements. And the current valuation, the current price already reflects the future improvements. What I said, new AI products, and maybe this foundry, at least to break even, maybe, or spin off. And it's already backed into the market cap and price. Because if you look at their earnings, minus free cash flow minus, and let's say on 50 billion in revenue, this will grow more in the future, and they are able to deliver 10 billion free cash flow and earnings, real earnings, then the market cap, yes, can go to 200 billion. Even more, if the growth rate goes higher, we may have 250 billion. And now, 250 billion. Let's write it here to see it. Now, when I look at the upside from 171 billion to 200 billion is not that much. I mean, just a little. Also to 250 billion, just a little. And to go to 250 billion, you might have to wait 5 years maybe. Never know. Depending also on the economy and what happens next. So, in my view, to open the box and show you the answer, in my view, Intel right now is not a great investment, because the market already reflects their future improvements. You no longer have an advantage right now. I mean, for sure you will have a return. I mean, who knows? 5%, 6% from this level to 200 billion, 250 billion. You might have a return, a positive return, but if you want returns over 40%, double your money in just a few years, you know what to do. Go to my portfolio. But with Intel, it's up to you. I mean, if you are pleased with that low return, you can invest in this company. But if you want more, it's not. Intel is not a great investment right now. So, to sum up, if you see a drop, I mean, from this level, be sure that the market cap can also go down, because they announced these positive earnings, but next quarter, as they want to acquire another company, they might also invest in this foundry, they might report other losses. And at that moment, also slow growth in the revenue, the market cap can go down to 150 billion. So let's write it down, 150 billion. So the upside and downside is somehow, I mean, the upside is not that much, and the downside can be, 10, 20% down. Be aware of that. Now, as I said, if you want better investment ideas, simply go to my profile, press join, choose Titan Investor, and there you have access to my portfolio with my great performance, also access to an investing course, how to take advantage of companies like Intel, custom-made videos, in-depth analysis at your request, so I'll make a new video only for you, and bonus access to the previous level Spartan and Gladiator. So see you there if you want to make more money. And that's it for this video.